I would be very worried, and I would want my gold. I would ask for delivery so I can put it someplace where I knew it was safe, because the risk you run is that several people try to get their gold, and if this bullion bank doesn't have it, then they're going to have to fail, in which case a lot of people are just going to be creditors of a failed institution rather than holders of gold or silver bullion.
Yes.
But is it a conspiracy, or is it simply individual banks pursuing a position? I mean, maybe J.P. Morgan, if somebody thinks that gold is overpriced and they're going to go down, they certainly have the ability to stake out a short position in an asset that they think is going to fall.
No, if you read the suits, the complaints, you'll see that there's accusations that they are signaling each other and acting as a wolf pack. And in fact, one of the suits actually claims violation of the Racketeering Act, the RICO Act. So, no, there's definitely an element of the banks acting together in concert to suppress the price.
Well, who's harmed? Who's harmed by the lower price?
Well, the investors. I mean, if you 2008, when there was a shortage of silver on the retail market and you couldn't find it, the mints were shutting down because they didn't have silver. We had silver knocked down from $21 to $9. Gold was also knocked down. In the middle of a credit crisis and a debt crisis, this is totally counterintuitive and illogical.
Well, if the investors didn't sell, I mean, I owned silver during that entire time period. I didn't sell any of my ounces, so I didn't lose anything. In fact, if anything, I was able to benefit from that as a silver and gold investor because I was able to buy more on that pullback. So it actually helps the investors when somebody artificially suppresses the price of something that I know that's going to go up. I mean, the only losers maybe might be mining companies who are selling their production at the time it's produced, and they go to the market to sell, and they got a lower price for their gold or silver because of a drop in the price. And so it could hurt a mining company in the short run, but I might argue that mining company might ultimately benefit because the longer gold and silver prices stay artificially low, the higher they're going to go when everybody has to buy. But to answer my own question, I think if this is actually happening, the real harm might be in monetary policy. Because if gold prices are not rising to the extent that they should, it sends a false signal to central bankers that their policy is not as reckless and irresponsible as it really is. So, Adrian, let's maybe cut to the chase. Where do you think the price of gold would be right now, or the price of silver, if all the gold and silver that everybody was buying was actually bought?
Well, I think the ultimate equilibrium price is $56,000 an ounce.
Well, $56,000 an ounce?
Yeah.
I mean, where are you coming up with a number like that? I mean, we're 56,000.
It's very simple. I mean, everybody talks about the U.S. dollar not being backed by gold, but that's untrue. If you look on the Fed's balance sheet, it clearly states that the collateral for issuing dollars is $11 billion of gold, which is at 42.2 ounces, dollars per ounce, is 261.5 million ounces, which is all the gold that the Treasury claims to own.
Now, that's claims to own. We have no idea if they actually own any.
They may not own it, but if you take the M3, which is $13.5 trillion, and you divide one by the other, then you get $56,000.
Right, but I don't think you can do that because all that money would end up being destroyed. I don't think that you could, because if the price of gold were even getting that high, a lot of people that owned it would be looking to sell it long before it hit 56,000. So I don't think you can actually, even though you can make that calculation in the real world, I don't think the price could get that high. I mean, it could with hyperinflation, but given the current price structure, right, given the current price level, because if you try to say that, I mean, what would the Dow, I mean, in order for the Dow Jones gold ratio to get to a historic low level, which would be 1-to-1, that would require gold to now rise to about 10 or 11,000 to be where it was in 1932 or 1980, and that would represent the extreme low point for the Dow. But if you're going to try to put this gold at whatever that 50,000, I mean that would be unprecedented. So the only way that could happen to the price of gold would be if all other prices rose meteorically as well, maybe not quite as high, or we'd have to So that high number in the terms that we know can't exist.